What's up, real estate friends? My name is Hayden Crabtree. I'm a commercial real estate investor. Primarily, I like to buy self-storage facilities, but today we're gonna be talking about if you are looking at buying a retail center, how do you know if that is a good investment or not? That is the topic of today's video. I'm gonna share my screen and we're gonna live time analyze a deal that is for sale. If you have questions at any point throughout this video, drop me a comment. I will respond to them to make sure that you get the help you need on analyzing this. My goal is to make sure that I help you guys analyze any kind of investment opportunity you want. On my channel, I have multifamily apartments, self-storage, industrial center videos on everything on how to go through and analyze those different kinds of real estates, houses too, whatever you need, I got your back. With that being said, please do me a favor, like the video, share it with a friend, and subscribe to the channel. It would mean a lot to me. It pleases the YouTube gods, and that's my goal here, is to make them happy. With that being said, let's dive into the video. So, as we can see here, I just got on loopnet.com, which is, pretty much the Zillow for commercial property, and was just scrolling through, and this one caught my eye because I'm from Athens, Georgia. It's where I went to college, and just wanted to come into this property here, and we're gonna take a look around. Let me get this refreshed. All right, so here is the deal. It is 3180 Atlanta Highway. It is a retail space. This is a daycare, but this can be used for probably a number of different things, from veterinary to doctor's office, whatever. Current tenant in there is a daycare. It is one tenant, 11,524 square feet. So we're gonna go through this and take a look. This is really, really easy to analyze. I'm gonna show you guys why that is. Because this is an investment triple net. What does triple net or NNN means? NNN stands for net, 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 or it's also called triple net. What that means is that you as the landlord, you don't pay any expenses, okay? The tenant, the person who's inside of that building, they pay for insurance, they pay for maintenance, they pay for utilities, they pay for property taxes. Literally, they pay for everything. The only thing they don't pay for is your mortgage to the bank, okay? You're still gonna have to face that expense. So we're gonna analyze this deal. I built what I think is the world's best deal analyzer in My Property Stats. If you want to try this out, absolutely free, you can do that. I will put the link in the description along with a coupon code you can use at checkout to get your first year free. After that, you can analyze unlimited deals for just $99 a year, right? But I'll give you your first year free to sign up. I want you guys to use this to analyze deals. I think it's the world's best real estate calculator to help you, and that's why I built it, okay? So I'm gonna analyze this new deal here, and what we're gonna do is we're just gonna type it in. So we'll call it Athens Daycare, and the address is 3180, whoops. All right, 3180 Atlanta Highway. And that's in Athens. If I can type today, Athens, Georgia. All right, and so this is a retail building with one unit, and it is 11,500 square feet, I believe. 11,524. 524, and they're asking a big old $1.6 million here. So $1.6 million. Okay, and this is gonna be a cap rate property, and I'll probably peg this at an 8 cap, okay? They're trying to sell it here on a 9 cap, which is interesting. We'll go through and kind of analyze this and maybe revisit the cap rate. Next up, let's look at the loan information. So I'm gonna do a 75% loan, and I am going to do it on, let's say, a 6% interest rate. And I'm not gonna do it on a 360 months, which is 30 year. You can get that on residential and apartments, but for a commercial building like this, it's likely gonna be a 20-year loan, 240 months, okay? And then we're gonna pay probably 0.5 points. All right, and we'll have a prepayment penalty on there. Now for closing costs, I'll probably peg this at, let's see, what is 1.6 million times 3%? 0.03 would be $48,000. I'll probably do $45,000. Sounds steep, but you can spend it quick. And then working capital, this is a triple net, so I'm actually not gonna add any sort of working capital in here. We might revisit that, but it's not super important on a triple net lease. Okay, so what this shows us is that the cost of this property plus the closing costs plus the half point from the loan, the total cost of this deal is gonna be $1.65 million. A 75% loan will have us borrowing $1.2 million, and we'll need $451,000 of cash to close this deal. Let's roll over and let's look at the income. So we have daycare income, right? And it's 11,000. We only have one unit, 11,524 square feet, one unit. And their current rent, here's how we're gonna figure this out, okay? The current rent is going to be the NOI, because again, it's triple net. There are no expenses. So the NOI is also equal to the income, because what I want you to remember is the income of $144,000 minus the operating expenses, which is $0, gives us the NOI. Well, what is 144,000 minus zero? It's 144,000. So we can back in and we know that the rent on this is $12,000 a month. So that's what I'm gonna come in and enter. The rent is $12,000 a month. I'll say that that's the market rent and the current rent, because I didn't read anything about a higher end market rent. Now, if you're looking at a building that is currently leased for, let's say, $10,000 a month, and for the next year, and the market rent is $12,000 a month, then you'll wanna note that down. I kinda go over those details on how to handle the concession rates in this multifamily video. If you wanna watch that one, it'll show you exactly what I'm talking about. All right, and so that's all we have to do for the income. And then if we go look at the expenses, well, guess what? We don't pay any of the expenses. So we're not gonna enter any of the expenses in. It's a triple net lease. Now, this is where if you were looking at a retail center that was not triple net, let's say it was, let's say there was it was gross modified, which means that kind of all the different things from utilities, maintenance, repairs, property taxes, and insurance were negotiated. So you could have a gross modified lease that would come through and say, hey, the tenant will pay property taxes and insurance, but the landlord will pay all repairs, maintenance costs, right? And utilities. Or it could be any variation of that. The tenant will pay utilities, maintenance, repairs, and insurance, but they won't pay property taxes. Whatever it is, you want to enter the expenses that you as the landlord are responsible for inside of this analysis. Another thing to note is you should expect and kind of familiarize yourself with when those leases are going to expire, because let's say that property taxes on this building are $10,000 a year and insurance is another $2,000 or whatever it is. If you move that tenant out and they don't renew their lease, then you're going to have to incur those expenses for some period of time while you go out and you try to find a new tenant. So that's when it's important to understand how your expenses are going to come up. And how I would handle that is I would just come down here into one-time expense information. And let's say that this lease ran out, I don't know, in 3 years, right? And so I'll say this lease runs out in 3 years. I'm going to say operating expenses while releasing. And let's just say while leasing. And maybe, between taxes and insurance, maybe we'll do some repairs. Maybe we'll say it's $20,000, right? And we'll come in here and boom, that's what we'll do. Now in year 3, it'll show it. And so that's all we have to do, right? We're gonna come through, we're gonna put in our pro forma, and we can read this. One thing we're gonna wanna do here is make sure that we're at 100% occupancy, because we will be occupied every single month. That's on the income page because we're leased every single month. If we're doing something like apartments or storage or something else, you expect some sort of turnover, and that's why I like to leave it at 95% physical occupancy. That leaves about 3 weeks out of every year for somebody to move out, and you release it, fix it up, whatever, while you're waiting for the new tenant to move in, okay? But in a retail center like this, if you're leased for multiple years, you're gonna be getting rent every single month. You're always gonna be physically occupied through that time. So now we'll come back to the pro forma. And this is what we're looking at, right? Is we have a effective gross income and an NOI of $144,000. We have a debt service from our mortgage we borrowed of $103,000, and that gives us a cash flow of $40,834 a month. Okay. Now, if we look at the cash on cash, if we come down to our financial measures, that's a 9% cash on cash. Remember, we put $451,000 into this deal, and we're earning $40,834 after we pay our mortgage, and that gives us a 9% cash on cash, which is pretty strong. And our IRR is around the 20% mark at the end of year 5. Our equity multiple is a little over 2, which means we doubled our money. And so that's how you analyze this deal. Overall, this is actually a pretty good deal. I wouldn't say there's a huge need to pay half price like I talk about in my multifamily video here, but depending on your goals, one thing we could do, like my goal is to earn a 15% cash on cash by year 2. So I could come in, I could enter 15% cash on cash by year 2. By the way, that's my goal. Doesn't mean it has to be your goal. I also like to earn a 30% IRR by year 5. I could come through and I could seek my answer here. And as you can see, My current price we're paying is $1.6 million. To achieve my cash on cash goals, we need to pay $1.366 million. To achieve my IRR goals, we need to pay $1.370 million. So this right here would be how much I would offer on this building in order to hit my 15% cash on cash goals, because if I pay less than the IRR goal, I'm automatically gonna hit my IRR goal, and also I'm gonna achieve my cash on cash goal. Super easy video. The thing about retail space is there's a lot of different types of properties out there, right? This retail was really easy because it was just one single unit with one lease that expires at one time. But you could have, you know, a 10 unit retail. Like if you see things that have like a Chipotle and then a Verizon and then, you know, a dog store and then a nail salon. If you have like a 10 unit building or something like that, you're gonna have to go through, and in the income here, you're gonna have to input each of their lease rates, and you're gonna have to understand how much each of their leases increase a year, right? And you can edit that inside of here, and you can edit how much their rental rate is gonna be year by year, and you can add multiple units here and their current rate compared to their market rate. So the My Property Stats platform can really handle however complex of a deal you have. This one was really easy to analyze, but all the same logic and principles apply, but you'd also have to dig in on a multi-unit multi-tenant building, which I'm a fan of a multi-tenant building, right? We have the daycare here. Something happens with them, they're our only source of income. I would rather have a multi-tenant building. You gotta go through and you gotta look at the netness of each lease, because one tenant may be reimbursing and paying for their share of property taxes and insurance, and another may not be. And so you just have to go through, and one thing that's really important in office, industrial, and retail is understanding the leases, because a lot of the value of the property comes from the leases. But anyways, that's all I have for this video. I hope it was helpful for you guys. Again, if you want to get on My Property Stats, there's a link below to sign up. Also 1 year free. There's a coupon code down below for you guys, because I love you. If you love me back, do me a favor, like the video, subscribe to the channel, and I'll see you in the next one.